Welcome back to Fintech Spy, where we take one green day, slap it on a chart that's been falling down the stairs for weeks, and call it a recovery. Today's episode, Hood, earnings in 2 days, and the sector just had a Friday green day that might be a bull trap, or the market's way of saying, relax, we only wanted to scare you a little. Not financial advice. This is comedy, chart therapy, and emotionally charged candle commentary. All right, here's what we're doing with Hood. We've got a sharp pullback. We've got a bounce attempt. We've got earnings coming up Tuesday post-market. And we've got the broader question hanging over everything like a free trial pop-up. Was Friday's green day the start of a recovery, or just the market baiting retail traders like it's running a social experiment? And this is where Fintech Spy thrives. Because Hood is one of those tickers where the fundamentals, the narrative, and the chart all show up to the same party wearing different outfits and pretending they don't know each other. So we're going to hit the same structure every time. What people are saying, what the news is doing, what the weekly and daily charts are implying, and what options traders are telegraphing with their open interest, which is basically the market's version of leaving a note on the fridge that says, I'm not mad, I'm just disappointed. Okay, analyst updates. Here's the problem. The fact sheet doesn't include fresh rating changes, and I'm not going to invent them because that's how you end up on FinTwit getting quoted by somebody's burner account named Gamma Gandalf. So instead, we're going to talk about the real analyst update this week, which is the one happening inside every Hood holder's brain. Step 1. Denial. This pullback is healthy. It's just resetting. It's constructive. Step 2. Bargaining. Okay, yes, the chart looks like it got unplugged, but earnings will fix it. Earnings always fixes everything. Step 3. The Hood group chat, which is just a bunch of people sending screenshots of the same fib level with different circles drawn on it, like they're decoding a treasure map. And step 4. Acceptance. Fine, I'll just trim a little. Which, speaking of trimming, news nuggets. The big headline in the fact sheet isn't a headline, it's a vibe. The sector had a green Friday, and nobody knows whether that was a real turn or a tactical head fake. But the real news nugget going into earnings is what you're specifically looking for on the investor call. Because Hood has been doing this thing where it's not saying anything technically wrong, but it's also not giving you the comfort data you want. You want to hear why the monthly data has stopped being put out for the past couple of months? Because when transparency fades, the market fills the void with conjecture, anxiety, and the kind of imagination that turns a missing PDF into a full-blown conspiracy trilogy. And you're not wrong to connect that to the sharpness of the pullback. Markets hate uncertainty, and retail traders hate uncertainty even more because uncertainty doesn't come with a target price and a dopamine hit. You also want to hear how growth is going to be accelerated, because you've noticed that leading into December, some metrics either pulled back or leveled off. And leveled off is just a polite way of saying, the line stopped going up, and now my brain is inventing worst-case scenarios. And then there's the big shiny object, Cortex. You're looking for clarity on what it is, what it does, and when the market can stop treating it like a mythical creature. Cortex Update has been sitting on the hype shelf next to AI roadmap and next-gen product cycle for so long, it's starting to collect dust. So yeah, a possible release window would be nice. I'll also admit it, I trimmed back my holdings going into earnings because I've watched Hood long enough to know it can turn a solid report into a character-building exercise. How about you? Still full size? Or did you also reduce exposure like a responsible adult for the first time in your life? Weekly chart facts. On the weekly, the story is simple. Hood bounced off the 77.10 fib level, and the hope is we can use that area plus the EMA 100 as support. In other words, we found a floor, and now we're all standing on it very politely, trying not to make sudden movements. The good part is that price respected a level that traders clearly care about. The stressful part is that after a move like this, every bounce feels like a suspicious text from an ex. Hey, you up? You don't know if it's genuine or if the next candle is going to ruin your weekend again. Momentum-wise, the weekly indicators are still leaning downtrend hangover, even if they're getting stretched enough that the rubber band is starting to look nervous. The takeaway isn't the numbers, it's the posture. Downside momentum has been in control, and now it's at the point where even bears are like, okay, we get it, you lift. And this is where we get a little bit of hope, because the sheet calls out that the stock RSI is way oversold. Translation: the chart has been pushed to an extreme, and the market is at least allowed to bounce without violating the laws of physics. Then we've got the weekly moving averages giving us a ceiling versus floor dynamic. The EMA 50 is basically the adult in the room saying, you can bounce, sure, but you're not coming back in the house until you explain yourself. And then the weekly drops the most important candle headline of all. A bullish hammer has formed. This is the part where traders suddenly become poets. A hammer at support after a dump with earnings coming. You can practically hear the collective whisper. What if? Now, hammer candles are not magic. They're not a guarantee. They're more like the chart clearing its throat and saying, I might be done embarrassing you for a bit. Which brings us to the daily, where the embarrassment has been much more personal. Daily chart facts. The daily chart is where Hood has been doing that thing where it slowly bleeds, and then one day it decides to fall faster. Just to remind everyone who's in charge. But the key line from your fact sheet is, we have reverse. That's the vibe. That's the emotional inflection point. That's you looking at Friday and going, okay, are we finally done with the pain arc? Now, the daily momentum picture has been ugly all week. And I'm not going to read out indicator values like a flight attendant announcing turbulence statistics. The important part is the sequence. Momentum got worse into the week. And then Friday shows a shift where the oversold condition starts to unwind a bit. That's the first time in a while the chart has even pretended to be polite. Your stock RSI note says it's still oversold, but heading toward neutral. That matters because it tells us Friday wasn't just a random green candle. It was a candle that showed up with a purpose. I'm here to stop the bleeding, at least temporarily. Now let's talk about the daily moving averages, because they're basically the Hood chart's ongoing custody battle. Your 50, 100, and 200 EMAs are all above current price. And the sheet calls out something crucial. The 50 EMA and 100 EMA are still crossed. Translation: the intermediate trend structure is still not fixed. Even if we bounce, the chart still has work to do before bulls can act like the crisis is over. Options: oddities. Expiration is February 13th. The expected move is plus or minus 12.32. And Hood is sitting around $84.40. That's not a casual expected move. That's the market openly admitting, we have no idea what earnings will do, but we're emotionally preparing for something. Now let's look at where the open interest is stacking. On the put side, the largest open interest is at $80, with 3.4 thousand contracts, followed by $90 with 2.6 thousand. That's interesting, because it's not just one fear level. It's two different anxieties living in the same house. The 80 line reads like, if earnings is messy, this is where the market might try to discover a new floor. But the 90 puts being heavy too? That's the market basically saying, even if we bounce, I still want insurance. Because Hood has a history of turning good news into a personality test. Now the call side is where it gets spicy. The largest call open interest is at $84 with 6.8 thousand contracts, followed by $91 with 5.8 thousand. That tells you traders are absolutely positioning around the current price like it's a magnet and a battlefield at the same time. The 84 calls being the biggest stack says, we're not even trying to be subtle. We want to move. We want volatility. We want to be right on direction and loud about it. And the 9-1 call interest says, if we get a real bounce, here's the line where we think the market might start acting like it forgives Hood. So what's the comedy translation? It's basically options. Traders looked at Hood going into earnings and said, I don't know what's going to happen, but I do know I want to argue about it at 80, 84, 90, and 91. That's not a plan. That's a cage match schedule. All right, I want to hear from you. Going into this earnings, what matters more for Hood's next move? The numbers, the narrative, or the transparency? And specifically, do you think the missing monthly data is a nothing burger? Or is it the exact kind of small thing that makes traders assume the worst? Drop your spiciest take below. If you enjoy overanalysis, chart comedy, and watching options traders reenact gladiator fights at round numbers, hit like, subscribe, and share this with the one friend who says, I love bottoms every time a stock drops 30%. Not financial advice. It's entertainment. And the only thing we're managing here is our emotional exposure. That's Hood. Bounced off a key level, flashed a weekly hammer like it wants to be brave, and headed into earnings with an options chain that looks like it's bracing for impact. Remember, markets don't move on logic. They move on surprise. And Hood? Hood has never met a surprise it didn't want to monetize. See you next episode. Same chaos, same candles, same questionable coping strategies.